All right, let's break down one of the most crucial reversal patterns you'll ever encounter, the double top. The anatomy of the double top. 1. The uptrend. It all starts with a strong uptrend. The price is pushing higher and the market is in an optimistic mood. Buyers are in control. 2. First top. After that rally, price hits a peak. This is your first top. Buyers are still in control, but the momentum starts to slow down. 3. Price pullback. Price takes a breath, pulling back to a swing low. This low is your neckline, the level that separates the bulls from the bears. 4. Second top. Here's the big moment. The price rallies again, trying to break the previous top, but fails. The price forms a second top at nearly the same level as the first one. 5. The break. When the price breaks below the neckline, the swing low, this confirms the trend change from an uptrend to a downtrend. Why does it happen? The double top is all about loss of momentum. In an uptrend, after the second peak, the price fails to break higher, which shows that buyers are losing steam. Essentially, the bulls can't push the market higher anymore, and the bears start to take over. What does it tell you? 1. Reversal signal. The double top signals a trend reversal. Once the neckline breaks, it confirms that the price is likely to move lower. 2. Bearish bias. The inability to make a new high after the second peak suggests the bulls have lost control, and selling pressure is mounting. The trade setup. Now, let's talk about how you can trade this pattern. 1. Identify the pattern. The first step is identifying a clean double top, two peaks at roughly the same level, with a neckline formed at the swing low in between. 2. Neckline break. The real action happens when the price breaks below the neckline, the swing low. That's when you're looking to go short. 3. Confirm the trend change. Once price breaks the neckline, it confirms the reversal from an uptrend to a downtrend. At this point, you'd enter your short trade, targeting the next support levels for profit. Pro tip. The risk. If the price doesn't break the neckline and pushes back up, the pattern fails. That's why it's essential to wait for confirmation before taking the trade. Stop loss placement. Place your stop loss slightly above the second top to protect your trade in case the market moves against you. The double top is a bearish reversal pattern. After an uptrend, price forms two peaks at the same level. A neckline break confirms the trend change, and that's your entry signal to go short. Now you've got the basics of the double top pattern. Recognize it, trade it, and use it to catch those reversals. If this video helped you understand the double top pattern a bit better, do me a quick favor. Hit that like button to support the channel, and make sure to subscribe so you never miss a future breakdown. There's a lot more coming your way to help you trade smarter, spot key reversal setups, and build real confidence in the markets.